For a lot of prop firm traders, the real game isn't in currencies or indices, it's in commodities. And when we talk about commodities, let's be honest, we're almost always talking about one thing: gold. This is an arena with absolutely massive opportunity, but it comes with its own unique set of rules and its own dangers.
This quote, it absolutely nails it. It captures the entire experience of trading gold in just 5 words. The potential for huge, life-changing wins is always right there. But the market will punish you, and I mean punish you if you're unprepared. That's the core idea we're going to unpack today.
So what's the big draw, right? Why does so much money, so much attention get poured into this one specific market? Well, the appeal is powerful, and it really boils down to a couple of key things.
And here's the thing. All these points are connected. Gold is what we call a psychological safe haven. So when there's a crisis somewhere in the world and panic sets in, where do investors run? They run to gold. That flood of money creates these enormous daily price swings, which is the volatility traders live for. And what comes with that? Beautiful, clean, powerful trends that you can ride for days or even weeks.
Okay, that all sounds amazing, doesn't it? If trading gold was that easy, we'd all be rich. The flip side, its unforgiving nature, comes from a very specific and, let's say, calculated tactic used by the biggest players in the market.
This is not random market noise. Stop-loss hunting is a deliberate strategy. The big institutions, the whales, they know exactly where retail traders like us put our stop-loss orders. Those super predictable spots just below support or just above resistance? Well, they will intentionally push the price to those levels just to trigger a wave of stops.
And this is what it looks like in the wild. You see that ridiculously long wick? That's the hunt. The price just flashes down, takes out all the stop losses sitting there, and then, boom, it snaps right back up, leaving a whole lot of blown accounts in its wake. If you've ever had this happen to you, you know exactly how infuriating it is.
So, the big question is, how do you avoid becoming the prey? Well, professionals don't try to fight the whales. You can't win that fight. Instead, they adapt. They build a defense system based on smarter tactics and, just as importantly, a rock-solid, disciplined mindset.
It all comes down to these 3 pillars. Think of this as your survival playbook for swimming in these treacherous waters. Let's break down each one, starting with how you actually protect your trades. Okay, this is so crucial. If your stop loss is in an obvious, predictable spot, you are basically painting a giant target on your back. You have to start thinking differently. Your stops need to be based on how the market is actually behaving, its volatility, not just some static line you drew on a chart.
And this is the pro move right here. Instead of picking a random price, you use a stop that's based on volatility, like the average daily range, or ADR. An indicator like this helps you place your stop outside the typical noise and those hunt zones, because the stop itself gets wider or tighter depending on how crazy the market has been. It literally self-adjusts.
Now for the next pillar. And really, it all boils down to this one single, incredibly powerful number. This might just be the most important rule in the entire book. 1%. That's it. By risking no more than 1% of your account on any given trade, you essentially guarantee your survival. One brutal stop hunt can't knock you out of the game. A bad day can't wipe you out. This isn't just a friendly suggestion. This is a non-negotiable rule that separates the pros from the gamblers. And finally, we have to talk about the mental game. The source material puts it perfectly. You need a stomach of steel. You are going to see wild, violent price swings. You are going to get stopped out on trades you thought were perfect. That emotional discipline, the ability to stay calm, to stick to your plan and not jump back in for revenge, that is your ultimate armor.
So if you take one thing away from this, let it be this. Your analysis can be spot on, but a stop hunt can still take you out if you aren't prepared for it. Success in trading gold isn't just about predicting which way it's going to go. It's about having the strategy and the mindset to withstand the storm. It's not about being right. It's about being resilient.